This presentation is to provide you with the key points of our first acquisition, which was completed in April 2012. Before describing the key aspects of the transaction, let us recall that Hibiscus Petroleum was Southeast Asia's first special purpose acquisition company, otherwise known as a SPAC. Through the IPO of our shares on the main market of Bursa Malaysia in July 2011, we raised 234 million ringgit. During our listing exercise, we disclosed that we intended to create a business in the exploration and production segment of the oil and gas industry. Companies operating in this segment of the industry look for oil and gas for commercial production. SPACs are governed by guidelines issued by the Malaysian Securities Commission and Bursa Malaysia. After completing our first transaction, called a qualifying acquisition, Hibiscus Petroleum transformed from a SPAC into a main market public company. Our qualifying acquisition gave us a 35% investment in a company called Lime Petroleum PLC. We selected this investment after an extensive process of reviewing 14 potential opportunities located in Oman, India, Vietnam, Indonesia, the Philippines, Australia, Papua New Guinea, and Thailand. Our selection was based on technical factors such as operational risks, commercial considerations, for example, financial returns, and geopolitical criteria such as political stability. 3 months after our IPO, we inked the deal with the initial shareholders of Lime, that is, Rex Oil and Gas and Schroders. The Lime deal comprised several components. Firstly, we injected $50 million into Lime Petroleum PLC for 27.2% equity interest. We also purchased a further 7.8% of existing Lime shares for $5 million, giving us a total equity interest of 35% for $55 million. In addition, we will pay Rex Oil and Gas $5 million in the form of a one-off discovery bonus, provided Lime makes a commercial discovery on one of its concessions that is verified by an independent expert before 31st December 2013. We engaged experienced and reputable firms to advise us on our first acquisition, namely Hibiscus Petroleum's investment in Lime comprises 5 key components. Firstly, we acquired interests in 3 exploration assets in Ras Al Khaimah, Sharjah, and Oman. All concessions are located in the Middle East, a well-established petroleum-producing region. Secondly, we secured a role as project manager of all present and future concessions. Thirdly, we invested in a debt-free group with $31.7 million cash. Fourthly, we gained access to additional concessions without a change in purchase price. And lastly, we obtained exclusive access to a portfolio of proprietary technical tools called the Rex Technologies. In respect of the Rex Technologies, Rex Oil and Gas, the major shareholder of Lime, has developed 3 unique technologies that are believed to reduce early risks in the discovery of oil and gas and reduce the time required to commercialize viable fields as compared to conventional technologies. The 3 unique technologies are REX Gravity, a tool that is able to detect possible hydrocarbon accumulations through use of satellite-gathered gravity information. REX Seepage, a tool to verify hydrocarbon presence through the use of satellite-gathered data. REX Virtual Drilling, a tool to confirm the type of hydrocarbon and its volume, and therefore reducing the chance of commercial failure when drilling a well. Lime has exclusive access to the use of REX technologies for 15 countries in the Middle East for a minimum of 3 years. For its future plans, the Lime Group expects to grow by actively seeking new concessions, acquiring 2D and 3D seismic data to enhance the prospects of the assets, and targeting to commence the drilling program in the fourth quarter of 2012. The oil and gas exploration and production cycle sees the greatest increase in value creation if drilling an exploration well results in a commercial discovery of oil or gas. The Lime assets we invested in are at the exploration stage, just prior to drilling commencement. Our valuation process began with Arca Geo, our independent subsurface consultant, providing an estimate of resource volumes within the various concession areas. Based on the Arca Geo derived volumes, Pareto Securities, our independent valuation expert, conducted a financial valuation using 2 methods, namely, the risked net asset value method and the risked financial market pricing model. After making price adjustments for various risks and considering that the asset being purchased is a block of shares in a private company, Pareto Securities opined that a fair value to be paid for the 35% interest in Lime Petroleum plc would be in the range of $52 million and $58 million US. Although Hibiscus Petroleum sees benefits from the acquisition, there is no certainty that risks will not adversely impact this investment. Some key risks that have been identified include the fact that the demand for oil and gas will depend on global market prices that are uncertain. Oil and gas exploration risks, including risks from wells to geological uncertainties, may have a serious effect on the Lime Group's financial condition. The Lime Group may not receive additional funding on time through public or private financing to support growth. The group is exposed to foreign exchange risk as a portion of the group's expenses will be denominated in local currencies. Acts of violence or war occurring in the Middle East may affect the stability in the region, which may adversely affect the Lime Group's financial condition. We believe that the Lime acquisition is positive because of several reasons. Instead of investing in only one concession, we have managed to invest in a company that has 3 concessions located in 2 countries. The concessions are in a proven oil and gas producing region, being the Middle East. The Lime investment was made at a reasonable price. The REX technologies reduce commercial risks related to oil and gas exploration. We are able to influence the direction of the company as the project manager of activities within the Lime Group. There is no increase in our purchase price for new concessions added into the Lime Group. After our entry, available funds in the Lime Group would be almost $85 million US with no debt. On the 16th of February 2012, we received approval for the transaction from the Securities Commission, just 4 months after the Lime acquisition announcement. This was followed by our shareholders' approval, which we received on the 21st of March. This presentation is only a summary of information provided in our circular to shareholders dated 28 February 2012. We are of the opinion that this first acquisition will increase shareholders' value in the future and we hope our investors will be able to see their investment grow as it has since our listing.